Let's talk about one of my favorite topics, stocks. Yes, the Nigerian Stock Exchange, absolute fire. However, there have been some participants in the market who say that investors should apply some caution and some discipline when it comes to this particular bull run. We had Kayode Omosebi of Wealth Bridge Financial Services yesterday, and here's what he said about the stock market run.
Well, the market has been a rally. It's been very great. There's the part where you can see the factors driving it. Strong corporate earnings. There's optimism about reforms, and we also had sector-specific catalysts. Insurance industry, that new Reform Act has triggered also rallies because investors have priced in the expectations of capital expansion, higher penetration, and also stronger underwriting capacity for insurance companies. And you see that reflect in the market. However, we also looked at the market as a whole, and we realized that there's still a need for caution in the market. Some companies who are not even doing as fantastic or are also reporting a loss or have negative earnings are also rallying. Some of them might be driven by stronger corporate actions happening, either a new investor coming on board or a major corporate action. But despite all this and the speculative positions, what we always advise is that there's still a need for discipline in the stock market. We need to look at the financials and look at the sustainability of the earnings of these companies. But it all bodes well to the fact that the equity market is actually mirroring the improved investor sentiments and the environment for the economy generally.
All right, let's continue the conversation. Abiodun Adedotun is a sales trader with First Securities Brokers Limited. He joins us to give us his take on what we're seeing. And by the way, market was up 41.73 yesterday. It's now 41.9 now. Abiodun, you're very welcome. Thanks for joining us. So what do you make of what Kayode said there? You think there should be some caution, discipline applied to this bull run instead of just hopping on the bull and enjoying the ride? What do you make of it?
Yeah, thank you very much, Rotus. It's good to be here. Yeah, it makes a lot of sense. Just like any investment you want to do, it's very, very important for you to do your due diligence before getting into positions. And that being said, right, it's been a fantastic run in the market, something that it's not so much surprising to some of us because it's been long overdue. Yeah. The assets are supposed to reprice, and that's what we're seeing right now.
So what would you attribute to this rally that we've seen so far then?
Yeah, there are a lot of factors. We've seen a lot in terms of policy reset since the current administration economically. We've seen that Nigeria is trying to realign itself to conventional economic practice. We've seen the NPR being retained at these extremely high levels, you understand, and to be able to continue to attract inflows. We've seen stability on the FX side of things. Of course, on the aggregate levels, there's confidence back in the Nigerian economy, and, it's just for a little bit of policies here and there, especially on the fiscal side. Maybe we'll get some discipline. We'll just be on a roll. Okay,
now speaking of on a roll, insurance stocks, I think it did 40% in 1 week. Before insurance, the story was consumer goods. I think we have the indexes. We need to put up the returns from the respective indexes. And it was consumer goods. Consumer goods was far and away well ahead. And then all of a sudden, insurance is up 108% return. Am I correct? Yeah, there we go. So consumer is 87 now, and they were the leader. And then insurance. What do you make of the appreciation we've seen and the buying in insurance sector?
Yeah, the insurance sector has actually taken a lot of hits. Since 2009, we didn't forget what happened. A whole lot of things happened in 2009. The market never forgot. Right. And whether we like it or not, capital is what drives business. Now, with this act, they are going to recapitalize. With this act, they'll get a little bit of liberty and freedom to be able to earn more. It's more like, okay, yeah, let's take position ahead of this coming windfall of.
So that's of course the President Tinubu signing the Insurance Industry Reform Act. That's what you're referring to, right? Fantastic. All right, so let's just go sector by sector. Banking now, since we're talking insurance and we're talking financial services, what do you make of? What's your assessment of the banking sector and banking stocks? You like them or?
Of course, the banks will continue to remain the key driver of any economy of the world. Yeah. More importantly, Nigeria, the bank is at the middle of everything. They are responsible for the direction of flow of funds, capital, and you need capital to be able to run the economy. So the banks will continue to do well. We expect them, they've been doing well say, the past 3, 4, 5 years,
Yeah.
and we expect them to continue to post impressive numbers.
All right. Nigeria has a lot of infrastructure projects. We've got, the capex portion of the budget. We've talked a lot about the different coastal roads and all these other things. Is that a tailwind for? I'm basically asking you your thoughts on industrial goods, particularly cement. Is that a trigger to buy cement stocks? What do you make of the industrial goods sector? Yeah,
there's a lot of opportunities in the industrial goods sector, but there are different factors that also determine how a rally is being formed, right? It ranges from the type of share ownership it has, free floats of available stock tradable in the market, the type of investors is likely to attract. Now, if you look at the industrial goods vis-a-vis the insurance, the insurance are more like the penny stocks, right? So we'd say your 100 million, you buy a 1 naira stock, you buy 100 millions of it, you could throw it in any direction. But unlike, the capital required to be able to drive some of these industrial goods, it has to be institutional plays. And one thing about institutions is institutions don't just it's never a knee jerk. So what you've seen on the insurance side is more of retail, local play.
Yeah.
But when you get to the institutions have to analyze things critically to be able to make a move. And in response to what you've said in terms of infrastructure, there's a lot of headroom in the cement, among the cement manufacturer. But one thing also is also raining on them, the cost of energy. The cost of energy has really been skyrocketing. We know what's happening on PHCN and all sorts of things, you understand, that is happening within the economy. They've also been able to adjust for this by increasing price. But at a particular level of pricing, you understand, it becomes counterproductive.
Right.
So it's more like, carrot and stick kind of thing. But is there opportunities there? Yes, massive. Given we are using cement in all sorts of road, construction these days, infrastructure development, as we've mentioned, and all. So there's still opportunity in the long term.
Okay, great stuff. Now, oil and gas. Now, oil and gas is the lone sector there that's actually down about 10%. I know oil prices have been, Donald Trump wants lower energy, right? And he wants lower oil prices. But, looking at the results of your Aradel, Oando, Seplat, and the likes, they've been pumping more oil. What's your assessment of the oil and gas sector in Nigeria on the stock exchange?
The oil and gas, we have to be careful when you talk about the oil and gas because these are quite a bit of giants, you understand, in their own sense. Seplat, a very, very big company, oil and gas, with the kind of assets they have since they've taken over the ExxonMobil, this thing. You have the Aradel, you understand, in their consortium, and you have Oando also doing their own thing. Now, they have different peculiarities. The reason why I believe an Aradel has not blown is because of, there was a share bonus issue before it was listed on the NGX. So there are a lot of retail holding the shares, you understand? So, you got free shares and you can just dump it anyhow, you understand? So, and institutions also, because they've not really attained that, number of years for them to be able to track the performance. So there's a lot of reluctance, in that space in terms of oil and gas. But on Seplat, if you look at since the last earnings release, it's actually been up in London. But the problem is that Nigeria had gone ahead. There's been a very, very big arbitrage opportunity. So it's more like we're trying to converge. So the players who would deal oil and gas are mostly institutions. And institutions are looking at, hey, what's going on? There's an arbitrage opportunity. Is this the right price to continue to buy? So you continue to see that kind of differential. And on the Oando thing, there's a lot attached to Oando, you understand? There's a lot of, concerns also about the financial reports, earnings being released on the one side. And also there's also news about the capital raise thing. So all these things are also...
So a lot going on in oil and gas, All right. We've had the CEO of MTN Nigeria here. We've had CEO of Airtel Africa not too long ago. We talked a lot about telecommunications. They recently had the increase in their tariffs, which is still not quite cost reflective. But almost everybody has a phone. 200, how many million phones we have in the country? What do you make of telcos, the telcos, ICT?
Of course, they will continue to remain a money spinner, but last year we got a shocker.
Yes.
MTN in particular, it was a big goal.
Right.
But given the kind of, it's MTN for crying out loud.
They'll recover. They'll be fine.
Yeah, they've almost turned the tide around,
and
but of course, where do they go from here? In terms of technology, how will they continue to compete? Nigeria being a low-income country, you understand? How will they be able to balance the match population number against, pricing and earnings? Of course, they also have to contend with the impact of possible future devaluation.
Right.
How it might impact their businesses going forward.
Yeah.
So all these things, are in the mind of investors, and they'll continue to reappraise positions. But notwithstanding, they really don't work. MTN.
Yeah.
Over 100%.
So telcos, so as far as a sector, they're looking at telco. I mean, there's only a couple of them on the exchange, but you like, essentially, as far as the outlook, you like telco stocks.
Absolutely.
Yeah. Okay.
Absolutely.
Now, consumer goods was the darling of the index before insurance just jumped ahead. And I love talking about the consumer goods sector because you're dealing with the disposable income of families, inflation, and so on and so forth. How are you assessing the consumer goods sector?
Okay, last year was pretty much a reset for every one of us in Nigeria. We know what happened with exchange rates. They were badly impacted. But one thing about consumer goods, man must eat, as the saying is. You understand? They had to pass on some of these costs. Some of them have to adjust their margins a little bit higher to be able to cater for the shortfall they are going to meet in terms of volumes. You understand?
Yeah.
Everybody is looking for substitute. If I can't take Milo, I'll look for a substitute to Milo and whatnot. You understand? So we know what's happening in the consumer goods. They are dealing with, a lot of these products, the raw materials are imported, right? And they've not been able to get a perfect local substitute, you understand, that would take them off, you understand, this FX thing.
Yeah.
But notwithstanding, they've been able to do well. They've been able to keep very, very decent margins. They've been able to post recovery on, on lost positions they were recording in 2024. And 2025 is looking like a better year and a base year for, the future growth. And mind you, one thing I would always say is this: asset needs to reprice.
Yeah.
Real estate has been repricing steadily for how many years now?
Yeah.
In short, even your imported Tokunbo cars and Nigerian used cars, we know how much we used to buy them and how much they are right now. You understand? So it's only normal for, the nominal price of these stocks. You understand? You don't expect them to be static. The balance sheets have gone very, very bigger. You have to price them accordingly. And that's what we are seeing across board.
So I guess, I'm glad you brought up real estate. We're almost out of time. Maybe I have to bring you back to talk about the real estate, because, we had a rebasing of GDP, and now real estate just jumped in terms of its contribution to the economy. But your overall outlook for the market as we close out the year and I guess going in, it sounds like you're bullish that the asset repricing is going to keep, but this train can't keep going on forever, can it? It's got to be a pullback at some point.
Yeah, we were expecting a bit of moderation, maybe mild correction.
Yeah.
We think some of these stocks are already well priced in terms of the level of earnings they are going to deliver, to shareholders. And of course, others also would have to join in kind of a bandwagon effect, you understand, to follow the train. But we'll still see some pullback. But net, you expect the market to close closer to 50.
Yeah, okay.
Index,
We'll see how things go. Look, fantastic conversation. Abiodun Adedotun, sales trader with First Securities Brokers Limited. Thank you so much for the deep dive on the hot Nigerian stock exchange. I appreciate your time.